In magic, there is a concept called misdirection. The magician waves his right hand frantically, flashing lights, smoke, big movements, so you stare at it. You're so focused on the spectacle that you miss what the left hand is doing. The left hand is where the real trick happens. The left hand is where the coin disappears. Right now, the stock market is staring at the right hand. Everyone is looking at Nebius Group, ticker symbol NBIS, and they are screaming about one thing: the cloud. They see a volatile neo-cloud company trying to fight Microsoft and Amazon. They see billions in spending. They see risk. But while the market is distracted by the cloud wars, they are completely missing what is in the left hand. Because if you actually rip open the balance sheet, which is exactly what we are going to do today, you realize something terrifyingly simple. You aren't just buying a cloud company. You are buying a holding company that is effectively trading for free relative to its future growth.
Now, before we pull this rabbit out of the hat,
I am not a financial advisor. I'm just a guy on the internet who reads 50-page equity research reports so you don't have to. The market is a casino, and I'm just counting cards. Do your own research, because today we are talking about a stock that is rated high risk, high conviction.
let me show you the $5 billion secret that nobody is talking about. Most people think Nebius is just renting GPUs to tech companies. That is the right hand. But let's look at the left hand, the assets they own that have nothing to do with renting servers. First, we have something called ClickHouse. You've probably never heard of it, but the apps you use every day rely on it. It's a database speed demon used by companies like Uber and Cloudflare to process data in milliseconds. Here is the math the market is ignoring. In late 2025, ClickHouse raised money at a valuation of $6.35 billion. Nebius owns 28% of this company. If you punch that into a calculator, that stake alone is worth $1.78 billion. That is nearly $2 billion of value just sitting there, doing nothing, not even factored into the daily stock price conversation. But it gets better. Meet Avride. This is their autonomous driving unit. For years, this was a money pit. But then, the script flipped. In October 2025, Uber, yes, that Uber, led a $375 million investment round into Avride. This wasn't just a pat on the back investment. This was a strategic validation. Avride is now launching robotaxis on the Uber platform in Dallas. The post-money valuation of Avride is $2.78 billion. And guess how much Nebius owns? 83%. That is another $2.31 billion in value. When you add in their edtech platform, TripleTen, which is growing revenue at 100% year over year, and their cash pile of $3.1 billion, you start to see the picture. Before you even touch the AI cloud business, before you even look at a single GPU, this company has nearly $8 billion in cash and liquid assets sitting in the bank. That is your safety net. That is the floor. Now that we know the left hand is holding a bag of cash, let's look at the right hand, the Nebius AI cloud. This is the engine. And folks, the engine is running hot. In the third quarter of 2025, their revenue surged 355% year over year. They aren't just growing, they are exploding. But the real story isn't the past, it's the contracts they just signed. This is where the Nebius is just a risky startup thesis dies. First, they signed a $17.4 billion deal with Microsoft. Then in November 2025, they signed a $3 billion deal with Meta. Think of it like this. Imagine you want to build a massive apartment complex. Usually that's risky because you don't know if tenants will show up. But Nebius, they already have the tenants. Microsoft and Meta have effectively prepaid the rent for the next 5 years. They've transformed speculative risk into contracted cash flow. And the moat protecting them? It's not chips, it's power. In the AI world, power is the new gold. Nebius has secured a pipeline of 2.5 gigawatts of power capacity. Even if a competitor bought 1 million NVIDIA chips tomorrow, they couldn't plug them in. Nebius can. So here is the trick. Here is the prestige. Let's look at the current valuation. The market cap is roughly $21 billion. Take that $21 billion price tag, subtract the $3.1 billion in cash, subtract the $1.78 billion ClickHouse stake, subtract the $2.31 billion Avride stake, subtract the $700 million in other assets. The market is effectively valuing the core AI cloud business, a business growing at 355% with $20 billion in signed contracts, at just $13 billion. If Nebius hits its guidance of $8 billion in annual recurring revenue by the end of 2026, you're paying roughly 1.5 times sales for this company. Competitors like CoreWeave trade at 10 to 15 times sales. If Nebius traded at just a normal 5 times multiple, the stock wouldn't be $20 billion, it would be an $80 billion company. That is a 4x return from here. But, and there's always a but, if it was this easy, everyone would be a billionaire. We have to talk about the bear case. We have to talk about the lockup. Nebius has been raising money like crazy to buy these GPUs. In December 2024, they raised $700 million in a private placement. The investors who gave them that money, they got in early, and eventually they will want to cash out. When the lockup periods on these shares expire, likely in early to mid-2026, we could see a flood of selling pressure. It doesn't matter how good the company is. If a massive fund decides to dump 10 million shares to take profit, the stock will drop. There's also execution risk. Building 2.5 gigawatts of infrastructure is a logistical nightmare. If there's a delay in cooling systems or a fiber cut or a permit issue, that $8 billion revenue target vanishes. They're priced for perfection, and reality is rarely perfect. Here's the bottom line on NBIS stock. The market is treating it like a speculative tech startup, but when you look at the sum of the parts, the Uber-backed robotaxis, the pre-IPO database stake, and the Microsoft contracts, the downside feels surprisingly protected. You're essentially buying a top-tier AI cloud player at a discount and getting a portfolio of unicorn startups for free. I'm not telling you to buy it, but I am telling you that if you ignore the left hand while staring at the right, you're going to miss the magic show. Thanks for watching. If you want to see me break down another hidden asset stock, smash that like button. I'll see you in the next one.